Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.
Agnico Eagle Mines is one of the better performing senior gold producers and recently consolidated the legendary Canadian Malartic mine in Quebec, Canada. This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. To tell us more is Ammar Al-Joundi, President and CEO. Ammar, welcome to Kitco.
Thank you, Paul. It's a pleasure to see you again.
Great to see you again. Now, Agnico, as I mentioned, is one of the better performing senior gold companies. You've got one of the lowest all-in sustaining costs in the industry, which means you've also got one of the highest margins or the biggest margins in the industry. What's your secret sauce and what advantages does that give you as a company?
Well, Paul, our secret sauce is the same secret sauce we've had since 1957, which is to be in the best regions that have the geologic potential and the political stability to build mines. Not just one mine, but multiple mines over multiple decades. And what that allows us to do, when we talk about the secret sauce and we talk about our lower costs versus our competitors, when you're in a region where you've been operating for multiple decades, you build competitive advantages. All of my peers, everyone in my position, is proud of their operating team, proud of their engineers, proud of their geologists. But when you step back and think what really makes a good miner, assuming everybody's equally smart, equally hardworking, what really makes a good miner is, do you know the ground better? Do you know the suppliers better? Do you know the contractors better, the permitting better? And all of that you get from experience. And where many of our peers are global miners, and they'll go anywhere in the world to build a mine, we're regional. We focus on, as I mentioned, places with geologic potential, but political stability, and we build a competitive advantage on the ground. And that strategy has been working for us. It continues to work, and I think over the next few years, it'll work better than it ever has before.
Okay, thank you. Let's talk a little bit more about your Canadian Malartic mine. It's in the Abitibi region of Quebec, and that's certainly a region where you've developed decades of expertise. And barely a quarter seems to pass without the company announcing some new potential you've found there. Now that you're 100% owner, how do you see its future development?
Well, we think the future is unlimited still, and I mean that both figuratively and literally. We've added about 15 million ounces in exploration in the last few years at Malartic, and it's still open. So this is a mine, again, in a region where we've been operating for 60 years, that we know very well, that has massive potential, and is a multi-decade, low-cost mine in probably the best place in the world to mine. But beyond that, it's not just the mine itself. What really excited us about Malartic, of course, was the geologic potential in our backyard, but also the mill capacity. Paul, this is a mine that is operating at around 60,000 tons a day, the mill, which is a huge mill. And as it transitions from Canada's biggest open pit mine to Canada's biggest underground mine, because the grade increases, we're going to be producing about the same amount as we go underground, but we're going to free up about 40,000 tons a day of mill capacity. Now, a big mill is 5,000 or 10,000 tons a day. So what this means, Paul, is we have 40,000 tons a day of mill capacity in arguably the most prospective region in the entire world to mine for gold. So it's not just the mine, it's the infrastructure. And by the way, the best way to make return on capital and risk-adjusted return on capital is to use existing infrastructure.
And that's a fantastic answer, because you've just done a really good setup for my next question.
Okay.
The Abitibi hosts several junior explorers with multi-million ounce deposits, which are right in your backyard. When are you going to break out the corporate vacuum cleaner and hoover these guys up?
Well, I'm gonna start by commenting on the question. You're absolutely right. This is a region that hosts a lot of multi-million ounce deposits. And that, I think, goes right back to our discussion about this is why we want to be in that region. And this is why we want to be the dominant player in that region. So you're right, we are the dominant player, and I can promise you we talk to everybody all the time. We know all of these companies. We know them well. They know us. They trust us. And I would expect that over the next several years, jointly, Agnico and many of these companies work together to create value for the shareholders, whether that's us acquiring some of them, whether that's us JVing with some of them, or whether it's something as simple as toll milling. If they have an asset and it's close to our existing facilities and they don't want to spend the capital on a mill and we have excess capacity, they do well, we do well, and it's really about making money for shareholders. So it's an excellent question, and I promise you we're looking at it and we'll continue to look at it, and we're going to move in that direction.
Isn't there a danger taking on partners or toll milling because you get another party in the equation? That's often where inefficiencies can occur. That's often where cost control is lost. Isn't there a danger of that?
There is a danger, but it depends how you do it. So in this case, we wouldn't have a partner in the mill. We would just have a contract that says we will mill some of their ore. And what that allows us to do, to the extent we have excess capacity, it effectively gives us a return with zero additional capex. And one of the things that is important in this business is it's not just about getting bigger. That's a problem sometimes. It's really about we're trying to make money for our shareholders, and we're trying to make them the most money with using as little of their capital as possible, because it's a return on capital. So you're right. If you're doing a JV and there's no clarity about who's operating, et cetera, that's not what I'm talking about. I'm talking about opportunities where we work together to really maximize the risk-adjusted return on capital.
Okay. Now, the current share prices of a lot of juniors would seem to represent a great opportunity for gold producers in general to acquire and build out their development pipelines, but there hasn't really been an overwhelming number of transactions. Why do you think we haven't seen more companies taking advantage of these, relatively low prices and potentially good values to fill in their pipelines?
Well, it's difficult for me to talk about other companies, but I can tell you from Agnico, as you know, Paul, we've done quite a bit of consolidation over the last few years. We've acquired Hope Bay and Nunavut. We've merged with Kirkland Lake to consolidate both the Ontario and Quebec Abitibi region. We've acquired the Canadian assets of Yamana, and we've done what I think is an excellent deal with Teck in Mexico at San Nicolas. So we've been active, but every single one of those deals goes to our strategy of locations that we know well, where we have a competitive advantage, and most important, every one of those creates value for our shareholders. So, I can't speak as to why there's not more of it, but I can tell you we've been active, and over the next several years, we're really going to work to consolidate and optimize what we've done.
Okay. Now, the recent years, we've seen gold producers, including yourself, exercise capital discipline, paying dividends, giving multi-year production forecasts, not doing anything crazy in terms of M&A, and yet the sector in general still seems to be unable to capture investor interest. When will gold stocks get a break?
I think gold stocks are going to go up in 2024. I know I'm talking my book, but just a couple of high-level things. When you think about the Fed having raised rates 500 basis points and gold price still up about 15% year over year in that environment, frankly, I think the gold price has done very well. It's held in there. A lot of generalist investors, I think, are looking at the dynamic and saying, I'm not convinced about gold until the Fed finishes. The Fed's going to finish. Maybe they'll have one more raise. I don't have a crystal ball, but it's sometime, probably the end of this year, early next year. And then I think gold is going to go up, and I think the generalist investors will come in. But what I would also say is, we at Agnico have a very simple philosophy, which is if we make a lot of money on a per share basis, the share price will take care of itself. Investors will come in, and we are executing on that.
Okay, so looking forward, what in the space are you most looking forward to? What most concerns you?
Well, for us, I think 2024 is going to be an interesting year because we have an awful lot of projects that we're working on that are with existing assets, existing regions, existing workforce, where we think we can generate a lot of value. And it's really, Paul, about optimizing what's been consolidated over the last couple of years. So, we have an exciting 12 to 18 months ahead of us. I think industry-wide, I like that there's continued discipline. I think that the world in general is appreciating that mining, all sorts of mining, including gold and other metals, are a more important part of the economy, a more important part of this transition from fossil fuels to an electrical world. So I think mining in general has a great future.
Okay. In Quebec, where it's your powerhouse, the government of Quebec, the provincial government of Quebec, has been putting a lot of effort to position the the province as a center of lithium-ion battery materials production and the battery components production. Is the province starting to focus more on that than on developing the gold sector?
The province is, you're exactly right in that the province in Quebec, and I would say not just Canada, but all of the Western world is focused more on this energy transition. And they are understanding that mining plays a very important role. And I wouldn't differentiate gold versus lithium versus nickel versus copper, because what we're finding is suppliers want the material, governments want to support it, but there's not that many actual miners who can mine it. And we are the best miner in Quebec, I would humbly suggest. So the Quebec government is talking to us, we're talking to them, we're talking to downstream, we're talking to upstream, and a lot of them are talking to us because they know that Canada is going to play a big role in this transition, and they're looking for the best miners. And I certainly would suggest, and they would suggest, that Agnico is at the very top of their list of strong miners in Canada. So what I'm saying is, while we are, in my humble opinion, a very, very strong gold mining company, I would say that in 10 years we're mining more than just gold.
Interesting. I look forward to hearing more about that. This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. Ammar Al-Joundi, thank you very much for joining us today.
My pleasure, Paul. Nice to see you again.
And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.